Expecting an announcement from the Federal Reserve that might affect the U.S. economy.
Yeah, 41 Action News anchor Jane Monreal explains the probability of an increase in interest rates.
Last time the Federal Reserve raised interest rates was about 9.5 years ago. Financial experts believe we will see an increase today, a move at least one economist believes is overdue.
They usually only hike rates when the economy is starting to overheat. They want to slow down potential inflation, so they'll raise rates to choke off that inflation. This time, though, it's a little bit different. I think what they're really trying to do is make sure that interest rates are in a normal area so that if we do have a financial crisis or a recession, they will have some room to roam. They can cut rates. But when interest rates are at zero, how do you cut rates? They're already nothing.
Portfolio manager and economist Chris Butler expects a 1/4% increase, and raising it again 2 or 3 times next year is not out of the question.
This time it's simply to normalize interest rates.
While rates hit bottom 2 to 3 years ago, they are still considered extremely low. So if you've been on the fence about making a big purchase like a car, Butler says go ahead and make your move now.
Yeah, I mean, if you're going to buy a house, now is the time to lock in that 30-year mortgage, where I don't necessarily think that interest rates are going to go up real fast. I don't think they're going down too much from here either.
Butler says any knee-jerk reaction in the next couple of days could translate to maybe a 0.2% increase.
You are going to see some knee jerks. I wouldn't be surprised if 2 or 3 days after the Fed has announced what they're going to do, mortgage rates do go up. But I also think that they will, at some point, cooler heads are going to prevail.
When it comes to home prices and finding a mortgage, Butler says it's inflation that has more of a bearing on that and your mortgage rate than what the Fed does. Jane Monreal, 41 Action News.